Good afternoon, Framework friends. Thank you for joining us for this first sprint event in our Inside Our Framework community. This is new for us, but we're super excited to have people join us inside our app for exclusive content and regular check-ins. So our sprint concept's a little unique. It's something that the Hinge team has been using since the first of the year. We're doing some leadership work inside the company, and it's been super fun that we meet once a week for a sprint, and a sprint means that we are fanatical about 30 minutes, because who doesn't have 30 minutes? And we start exactly on the minute and we end exactly on the minute. So we will be super respectful of your time, and that's my intention here as well. We'll be coming to you guys every other week with new information, new check-ins, new ideas about how to manage your business more effectively. And these are fantastic, whether you've been in the app and put all of your information in or not. So no worries there. Today is meant to be a pretty high level of where your key focus areas are, because I want you to know where your best opportunities are. We always want you to know that, but this year especially, because you're going to have the opportunity to plug into a lot of content, a lot of analysis, and I want you guys to be able to direct your very precious time to the things that make the biggest impact for you and your school, which then make the biggest impact for the children in your care and the families that you support and your staff, the very critical piece right now. So format for this is I have some content for you guys for about 20 minutes. I'm going to leave about 10 minutes for you to ask questions or comment. To the right side of your screen, you'll see a chat bar. You will also see a Q&A section, so please keep those going. I'll keep an eye on it during the conversation in case something isn't clear. And then we'd love just to have a conversation as we go. Some other things just to mention are that we're excited that as the year goes on, we're going to find more ways that we're working on right now for you guys to connect with and share wonderful ideas with your framework community. I hope that you've had a chance to get into the Content Hub. I think you've gotten into it or you wouldn't be here right now, because that's where this webinar is launching. But there are a lot of articles and tips and comments from people around different issues that hopefully will give you some thoughts about changes you might make that would make your business stronger. So what I want to start with today, again, I'm intending for this to be a focus on your plan for the coming year. And I am happy to see you all. Thank you. Thank you for the trust in us to join our framework community. I love this quote so much. I used to use it with some former teams, but it's one I use for myself. Hope is not a strategy. Hope is great. I hope things go well after I strategize and put my plan in action. But without a plan and an action, hope doesn't get you anywhere. Life takes over and directs you where it wants you to go. And there are concrete things and small tweaks that make a huge difference in your school and in your business life. So let's make a plan. I want to focus on the big picture, and I don't have a ton of slides here because I want this to be a very high level conversation about where you are with the 5 greatest areas of opportunity toward your financial health. You guys, if you played around with Framework, you'll know that the system is built so that with key pieces of information, the system will give you tips and ideas about how you are doing with your occupancy, your tuition rates, your discounting, your salary cost control, and your facility costs. And if you look at those things and big spectrum of your financial health, those get you 95% of the way there. If you focus on those 5 things, and actually 3 of those things don't have to be dealt with every day. 2 of those things should be monitored every single day. Excuse me. Also, excuse me for the stuffed up head today. Non-COVID, I ruled that out. So I want to start here because I also would like to invite you to consider this content for your managers, your directors. Maybe even at times I even drill down into teachers. So they would understand that it is a complex financial picture. A lot of times they'll get the financial statement and glaze over and, it goes into the waste bin in the back. But if they can focus on the things that make the biggest difference, 5 things get you 95% of the way there. The other 30 things make up the last 5%. Have I ever seen those other things cause an issue that in a school? Yes. It's so rare that until you've dealt with these 5 things, there's no need to go into in deeper. You'll also notice if you played around with framework that you don't have to input every bit of data to get some very key pieces of information. You can actually put in your tuition rates, discounts, current enrollment, some salary information, and your rent or mortgage number, and get the main 5 reports. If you want to go further than that, you can load all of your expense information, and the system will create a more detailed benchmark for you based on your school completely. If you're familiar with the basis of framework, it for anyone will create a budget or a benchmark based on what the average school, given your school size and tuition rate structure, it will create a benchmark for you. But if you go through the entire system and framework, it will be customized to your school all the way down the financial statement. But you don't have to go that far because that's the most difficult piece. And what we wanted to do was create a system for you that was super easy for you to identify your best areas of opportunity. So I'll encourage you to go in and start to play with that information. Let us know if we can support, if you have questions. I'll also say that you guys are, as users, are going to be getting a survey in the next couple of months. We intend to launch our 2nd version, which means this will be upgraded for anything that's not quite working for you. We noticed some things already. We knew we're a little bit of a barrier to a lot of detail, and some of those things are things like multiple options for part-time tuition rates. At the moment, there's only one option. So we're starting to upgrade some of those things, and your feedback will be critical for us. So let's start with these 5 and some tips and trends in each one and things for you to look out for. I'll first go to occupancy. How full is your school? And I will say that if you aren't full, or if you're not 70 to 90% full, don't even think about the rest of this list. You can't cost control or make enough policies to get around not being full. So if you're not full, work on strategies to get your occupancy up. For most schools, they'll break even at about 50% full. They'll put a healthy number on the bottom line when they're about 70% full. And 70 to 100% full is pure gravy. You've got your costs covered. You need a little more food, a little more supplies, maybe another part-time staff. But almost every tuition dollar over that amount goes straight to the bottom line. So that's your sweet spot. Barriers today to full occupancy are usually a lack of staff. And I wouldn't be the least bit surprised if the majority of the people here said, I'm artificially low. I say artificially because you have the demand, but you don't have the staff to support the children that want to attend your school. If you're in a situation, and we'll talk about staffing and salaries in a minute. If you're in a situation where you don't have the demand, then I would suggest to look inside at what other things you can do. The majority of the industry has more demand than ever. Their schools have gone out of business. Governments are supporting our business. Investors are pumping money in and just swarming us for quality assets to purchase. The industry has never enjoyed such a high public standing. And some of the things I would suggest are to consider things like your branding. And when I say branding, I don't mean your colors and the name of your company. I do mean that, but I also mean much more than that. What does your building look like? What do you stand for? How do your people communicate your core values to prospective parents? Look inside your house and make some changes in the way you operate. Now is the time to be bold, be innovative, add a new curriculum component, make your facility look fabulous. In most states, there's funding that some of the grant funding can be used for things like that. So that number one place to start, if you're not at least 70% full, don't focus on anything else. And until you get to 90% full, make that your daily mission. So daily mission, occupancy, daily mission, salary control. The other three we'll deal with occasionally. So the second area of opportunity is your tuition rate. So let me just say right now, you guys have heard, if you've heard me before, you know how preachy I get on tuition rates and discounting. I will say on tuition rates and discounting are usually the problem with the salaries and spending too much on the facility. And what I mean by that is salaries have never increased as fast as they are right now. In some cases, no matter what you pay people, you can't get high quality, you can't get anybody's. But I don't see that ending. And it's not just your new entrants. If you have to start them here, then everyone that's here has to go to here. They've been there a while. So it's going to continue. And usually it's a function of not increasing your tuition rates quickly enough. Now, I know right off the bat that you guys hold your tuition rates to a respectful level, and most providers do that because they care about their families. I also care about your families. I'm your advocate though. And so what I want to say to you is, if you're up in the middle of the night worried that you can't pay people enough, that your mortgage is too high, that you're going to lose your business, that you can't care for yourself the way you should be, then you can't possibly do what you got into this business for. So you're not only not helping yourself, you're not helping your teachers, you're not helping your directors, you're not helping your families, you're not helping your community. Sacrificing yourself for the good of others is not a healthy practice. It's good for no one. So very bold moves are being made in increasing tuition rates. I would like to hear from most people that since COVID started, they have had more than 2 tuition rate increases. And historically, the industry has increased 3 to 5% a year, mainly to account for changes in costs. Our costs are escalating so quickly right now that that's not logical anymore. Some things for you to consider, some strategies that are great, are to hold your current families as legacy families, maybe increase them the normal 3 to 5%, and make them feel special. They're legacy families now. You're going to hold their level of tuition, and new families coming in can be increased dramatically. They can make the decision to come or not to come, but that's a great way to increase tuition rates greatly if that's the situation that you're in. So that's a really good strategy. Other things to consider on other income in addition to tuition rates, we have a lot of schools moving to some subsidy type programs or increasing those programs that have become more popular since COVID, better funded, and some of the schools with heavy subsidy funding sources did better than they ever have during COVID. They were being paid tuition dollars for children that weren't attending, and they have big cash balances, and they were able to reinvest in their schools and set themselves appropriately for the next 10 years, where salaries are going to be higher and things are going to cost us more. We are not living in the same world we were 3 years ago. And we are the ones that have to adjust and adapt, and quickly and boldly. So the subsidy tuition, people are either increasing or adding. That leads to the USDA food program. Once you get to about 20% of your population is on subsidy tuition, and also Head Start collaborations have become more and more popular for the last 10 years. There are articles on all of those in our content hub, or ask us questions. Either one, any of those could be a complete sprint. Also, be bold about grants. I think you guys are doing a fantastic job, but if you have to add people resources to access grants because they can be complicated, it's well worth it, very worth it. And lastly, always throw out public school after school. If your nearby public schools perform after school programs on their site, if they do it themselves and they're happy doing that, maybe there's not much you can do. If they outsource it to anyone, you have the right to bid for that program. And you might think they would cannibalize your in-house after school program, but they actually don't. They enhance your in-house after school program. So those are some ideas about revenue and tuition rates. On discounting, I will say that there are 5 typical discounts, and the industry before COVID was largely moving away from some of those. I have some providers who do 0 discounting now. For most people in most markets, they need to continue to do staff discounts. So that is not one I would suggest that you do if you're not already doing it. It's a great way to get people, and it's certainly not a time to take things away from people. So rules of thumb are free childcare for directors, sometimes also assistant directors, and half-price childcare for teachers. Some people are now limiting the free or reduced childcare to 2 children per team member, and also limiting no discounts for infants and toddlers. You're probably losing money on your infant and toddler programs. There's some states where that's not true because tuition rates are high enough to allow you to at least break even or make some money in those programs. But if you have significant numbers of children discounted in those programs, it's really difficult to be financially sound. So some of those practices have been put in place. With the desperation we all feel for people right now, maybe not the right time to make those changes, but things to consider for the future. Some other discounts that have completely gone away are free or vacation days. So I won't get up on that soapbox, but there's some articles in the content hub, but the industry started moving away from days that families didn't pay for about 10 years ago. I hear people regularly, very high quality schools say, well, my market still does it. Well, that doesn't mean you have to do it. I want to say that about tuition rates and discounts. I think we're in a market right now where you need to pay less attention to what your competition is doing and more attention to what you need to do to be financially healthy. First of all, just because they operate in your market does not make them competition. And second of all, they probably are suffering. And if they don't take bold moves, it will take them years to recuperate. I like to use the example of when the lottery funded 4K program entered the state of Georgia about 25 years ago. As we all know, 4-year-olds are one of our biggest profit makers, and they balance out other programs where we don't do so well. When universal pre-K was instituted, private providers performed or provided 4K classes that were funded by the government, meaning those were break-even programs because teachers were paid as public school teachers are. With that program breaking even, it put a burden on the financial picture of the entire school for years and years and years. And I operated schools in that state at the time. I believe it took about 10 years for the industry to adjust its tuition rates and ways of operating enough to make up for that change. And that is really slow change. So I would recommend to you guys that you think differently about holding tuition rates and discounts lower and eliminating discounts. And you can use Framework as a great tool for this. We love the function where you can click off the discounts for certain age groups or types of discount. You can also toggle your tuition rates at the same time. Maybe you do a lower tuition rate, but you get rid of a discount, maybe only in a certain age group, and the financial effect will pop up so you can make some decisions about what that looks like financially. What I would suggest that you do is consider higher than usual tuition rate increases. If you're still giving free days, eliminate those. Also consider the discount for multiple children in the same family. Consider that. The industry has started to move away from it. You could grandfather current families and do that for new families. So that's another one to consider. There are other discounts that people give, but I'm going to tell you today about those big three. Hold your staff discounts. We need to do as much of them as possible. Eliminate vacation discounts and consider eliminating discounts for multiple children in the same family. I want to move to salaries, and salaries is we're going to give you guys some great content from Kathy Ligon coming up in a couple of weeks about how to balance your staff and the rising demand for pay rates and hours and the rising payroll costs when we're a low margin industry to start with. So it's never been more important for us to closely monitor hours. This is the second one, along with how full are you, that you need to be thinking about every day. How can I build more enrollment? How can I more effectively manage my salaries? And in this environment, it's usually not what you're paying a person. It's usually in managing the amount of time that they're being paid. So that's more important than ever before. But also, again, when I get the call from people that they're having trouble managing their salaries, it's usually more of a function of tuition rates that are too low or discounts that are too high. So consider those three things in conjunction. There's also a toggle on the system and Framework where you can manipulate your salary percents and see what effect that has on your bottom line. Too much to talk about around salaries for us to do that in this sprint, but a very big issue and something to be paying a lot of attention to. Your rent or your mortgage is named here because after salaries, which are 40 to 50% of parent tuition dollars, your rent or mortgage is going to be 10 to 17% of your revenue. So it's the second largest expense. Rarely, but sometimes we see people who got themselves in trouble for putting too much into their building or committing to too much rent when their revenue doesn't support it. So there are some strategies there to go back and renegotiate. It's not too late. I hope you guys used COVID to renegotiate everything, your rent, your mortgage with the bank, your supplies, your vendors, your food. I hope that you used it as an opportunity to improve your systems and communication with parents. I hope you used it as a chance to have parents pay more efficiently and to reduce your man hours. A lot of schools moved to parent provided meals. It's become more popular, and that 5 to 6% might become 1 or 2% if you can have parents bring lunch, and that's dollars you can move to your staff costs. And tell parents what you're doing. Tell them, they love your teachers. If you can tell them that your intention is to use certain expense items to pay teachers more, you get much more support. Also, a quick word on minimum wage increases. In my 36 years, I've experienced many minimum wage increases. And in my experience, parents can absorb tuition rate increases much better from a PR standpoint because they know that's coming. When it comes, know what you're going to do. It could happen quickly. Sometimes you'll have a tiered system over many years. Have a plan, communicate to parents, and be sure that you keep up with that. So those are my big focus areas for you guys this year. I hope that you'll take this information and the combination of the framework system, identify where your best opportunities are, and focus there every day. I know you're in the weeds. I know you still have classrooms shutting down. I know you need more bodies in more classrooms, and do that intentionally. That's okay if that's what you're focusing on. Just do it intentionally and know why you're doing it. So we have 4 minutes because, like I said, I am going to respect your time, and we will do that every time. And in 30 minutes, I'm going to send you back on your way, and hopefully giving you a few things to think about. So I will take a question or two if anyone has them. While those are popping up, I'm going to let you know about a couple of things we're working on here in conjunction with Framework. We hope later in the year to launch 2 things. One thing is QuickBooks training for people who produce their own financial statements through QuickBooks. I'm an accountant, but I do it for Hinge and I use QuickBooks, and I think it's a fantastic program for people that want to do it themselves, and it does not require an accounting degree. The second thing is we are partnering with and bringing someone on who will be your outsource production company for financial statements if you choose not to do it yourself. So look for those things later in the year. And then in 2023, we're looking at providing issue-specific mastermind groups inside Framework. So we will likely, everything will have a financial focus. We'll probably likely have a growth group that will talk about the specifics of how you grow, what the metrics look like, where you go for growth opportunities. We'll keep each other informed and motivated, and we will track each other and be sure that we know what we're all doing and hold each other accountable. So look for those things over the next. So help with financial statements this year, probably in the summer, probably mastermind groups that will launch the 1st of 2023. And I'm afraid we're going to blink and it'll be here because I can't believe it's March already. So I think we have no questions. I think that means that you guys are in Framework and you are just rocking it. Okay, thank you, Kimberly. How should your tuition be added in Frameworks if you have legacy tuition rates and then different rates for new families? That's a really good question. So that's something that we are going to work on in our second iteration that'll be coming out later this year. It's one thing that we know that a lot of people are focused on that now with different tuition rate structures. I have 2 answers for you. One answer would be to average the 2 rates if they're in the same classroom, and then just use the numbers enrolled in that classroom. The second option would be to create a Caterpillars 1, Caterpillars 2 for the same classroom and put the number of students paying one tuition rate in number 1 and the enrollment there, and then the alternate tuition rate in number 2 and put it there. We are a great question, Kimberly, and thank you for raising that. We've recognized that as something that we'd love to add more flexibility on. So thank you for that. And it is 1:30, and I appreciate so much your trust in us in helping us play around with this new app. We welcome and honor your feedback. We love to hear the hard stuff, so don't worry about it being the hard stuff. And we want you to be as successful as possible. We want to, as you do, care for all the teams and all the families and children in our country that are in our systems and in our schools. So take care and be well.